The US dollar has been a dominant currency for decades, but recent economic and geopolitical shifts have put it at risk of losing its status as the world's reserve currency. In this video, we will explore the reasons behind this shift and what the future of the US dollar looks like. Section 1. History of the US dollar. The US dollar has been the world's reserve currency for decades, with countries holding large amounts of US dollars as a store of value and as a medium of exchange for international trade. However, this dominance is not guaranteed, and the dollar's status as the world's reserve currency has been challenged in the past. One of the most significant challenges to the US dollar's dominance came in the 1970s, when the US ended the convertibility of the dollar to gold. This move, known as the Nixon shock, created a system where the US dollar was no longer backed by a physical commodity, leading to inflationary pressures and a decline in the dollar's value. Since then, the US dollar has faced other challenges, including the rise of the euro as a potential reserve currency and the increasing use of digital currencies such as Bitcoin. However, the US dollar has remained dominant, and many countries continue to hold large amounts of US dollars in their reserves. Section 2. Current economic and geopolitical shifts. Despite the US dollar's dominance, there are currently several economic and geopolitical shifts that are putting the US dollar's status as the world's reserve currency at risk. One of the most significant shifts is the rise of China as a global economic power. China has been steadily increasing its economic influence, and it is now the world's largest trading nation. As China's economy grows, it is likely that more countries will begin to hold Chinese yuan in their reserves, reducing their reliance on the US dollar. Another shift is the increasing use of digital currencies. While the US dollar remains dominant in traditional international trade, digital currencies such as Bitcoin and Ethereum are becoming more popular as a medium of exchange for online transactions. While these currencies are still in their infancy, they have the potential to disrupt the traditional financial system, which could undermine the dominance of the US dollar. Another reason for why the US dollar could weaken include the collapse of Silicon Valley Bank. It could have significant implications for the US dollar. One of the main impacts is on the overall stability of the US financial system. Silicon Valley Bank is a large and influential institution, and its collapse could lead to a domino effect, with other financial institutions being impacted as well. This could lead to a loss of confidence in the US financial system, which could put downward pressure on the US dollar. Another impact of Silicon Valley Bank's collapse is on the technology industry. The bank has been a major provider of financing and other financial services to technology startups, and its collapse could lead to a slowdown in the industry. This could lead to decreased demand for US technology products and services, which could further lower the value of the US dollar. We are already seeing many startup tech companies struggling to make ends meet after losing one of the biggest banks in the tech industry. This will slow economic growth down and in turn lead to the dollar taking a hit. Finally, Silicon Valley Bank's collapse could impact investor confidence in the US economy as a whole. If investors believe that the US financial system is unstable and that there are significant risks to investing in the US, they may move their money to other currencies or assets, which could further lower the value of the US dollar. Finally, the coronavirus pandemic has had a significant impact on the global economy. The US dollar has been used as a safe haven currency during times of economic uncertainty, but the pandemic has led to unprecedented levels of government spending and debt. This has led to concerns about inflation and a potential decline in the value of the US dollar. Section 3. Impact of a declining dollar. A declining US dollar could have significant impacts on the global economy. One potential impact is an increase in the cost of imported goods for countries that hold US dollars in their reserves. This could lead to inflation and potentially destabilize the global economy. Another potential impact is a shift in global power dynamics. The US dollar's dominance has allowed the US to exert significant influence on the global economy and international affairs. A decline in the value of the US dollar could lead to a shift in power dynamics, with other countries potentially taking a larger role in global affairs. Finally, a declining US dollar could have significant implications for the US economy. A weaker dollar could lead to higher inflation and a decline in purchasing power, potentially leading to lower living standards for Americans. Additionally, a weaker US dollar could make it more expensive for the US to borrow money, potentially leading to higher interest rates and slower economic growth. A weaker US dollar can have significant impacts on the global economy. One of the main impacts is on international trade. A weaker US dollar makes US exports more competitive in global markets, which can help boost the US economy. However, it also makes imports more expensive, which can lead to higher inflation and lower living standards for Americans. Another impact of a weaker US dollar is on global financial markets. As the US dollar weakens, investors may move their money into other currencies or assets, which can lead to volatility in financial markets. This volatility can make it more difficult for businesses to plan and invest, which can lead to slower economic growth. The weakening dollar and inflation have had a significant impact on the labor market. One of the main impacts is on the purchasing power of workers' wages. As inflation rises, the value of workers' wages decreases, meaning that they can buy fewer goods and services with their earnings. This can lead to decreased quality of life for workers and their families. Another impact of a weakening dollar and inflation is on job creation. As inflation rises, businesses may be hesitant to hire new workers as the cost of labor increases. This can lead to a slowdown in job creation and a weaker labor market overall. A weakening dollar can also lead to increased competition from foreign markets. As the dollar weakens, other currencies may become more attractive to foreign investors, leading to increased investment in other countries. This can lead to decreased demand for US goods and services, which can further harm the labor market. Finally, a weaker US dollar can impact the US's position as the world's reserve currency. The US dollar has been the dominant currency in global trade and finance for decades, but a weaker dollar could lead to other currencies, such as the euro or the Chinese yuan, gaining more prominence. This shift in global power dynamics could have significant geopolitical implications. Conclusion. In conclusion, the US dollar is at risk of losing its status as the world's reserve currency due to a combination of economic and geopolitical shifts. One of the main factors behind the US dollar's decline is concerns about rising inflation. The US economy has been recovering from the coronavirus pandemic, and as a result, there has been a surge in demand for goods and services. This increased demand has led to higher prices, with inflation rising to its highest level in over a decade. Another factor contributing to the US dollar's decline is the Federal Reserve's monetary policy. The Fed has kept interest rates near zero and has been purchasing large amounts of government bonds to stimulate the economy. While this policy has been effective in boosting economic growth, it has also contributed to concerns about inflation and has put downward pressure on the US dollar. Finally, the US dollar has been impacted by geopolitical tensions, particularly with China. The US and China have been engaged in a trade war for several years, and tensions have escalated in recent months over issues such as human rights abuses and technology policy. These tensions have led to concerns about the stability of the global economy, which has put downward pressure on the US dollar. The US dollar is heading for its longest stretch of weekly losses since 2020, with concerns about rising inflation, the Federal Reserve's monetary policy, and geopolitical tensions contributing to its decline. While a weaker US dollar can have both positive and negative impacts on the global economy, it is important for policymakers to carefully manage the US's monetary and fiscal policies to ensure stability and growth in the years ahead. If you want to learn more about the recent events that have damaged the dollar's value, watch these videos here on Extreme Economist.